continue the stock-specific discussion. Sudip Bandyopadhyay joins us on the show now from Inditrade Capital. Sudip, to begin with, tell us your view about these banking heavyweights, HDFC Twins and ICICI Bank. How should one approach it?
Well, fundamentally, there is absolutely nothing wrong with these banks. They have performed. ICICI Bank has performed remarkably well. I think we have been seeing the quarter-on-quarter results of ICICI Bank, and every possible parameter they have outperformed. They are past as well as the market expectations. It's been a fantastic turnaround story. The valuation at the current levels are definitely not cheap, and the margin of error is very, very limited. But having said that, if somebody is taking a slightly longer term view, there is absolutely no problem. Also, I must say that there is definitely a positive tailwind behind BFSI as a whole and banking in particular. And the top banks like ICICI and HDFC Bank will definitely benefit because of the tailwind. The credit growth is there, asset quality is improving, and also recoveries are happening. So, under the circumstances, I think it's a good story. Also, the future, we to a great extent believe that it will be the liabilities part of the balance sheet which will play more and more important role, and the composition and the strength of the liability side of the book will determine the success for the larger banks and even other BFSI companies in the coming future. So yes, these both are good banks to buy for a long-term hold. The recent correction and whatever is happening in the market, on a day-to-day basis, one can try and trade one way or the other. But if it's a investor and if it's a long-term view, definitely positive.
Some of the other buzzing spaces as well, and it's actually only pharma. There's of course L&T Housing Finance as well, which has jumped up about almost 5% as we speak right now. Godrej Properties, of course, is looking also very strong indeed. So that stock has been holding out very well. There's of course been a brokerage upgrade. Zydus Life has been the other buzzer in trade. And IDFC First perhaps is the solo bank, which is actually holding up in the green as opposed to what others are doing. Even PNB has now joined the rank of underperformers. It's down 2.5% as we speak. And it's quite intriguing what's happening within the realty pack. So while you do have Godrej Properties on one hand, look at DLF for instance, and this has been a big buzzer of late. It's down 2.5%, so almost a pair trade kind of move on both these names. But Sudip, what is it that you're making of the realty pack? It's done really well. Most of these stocks already at 52-week highs. Would you still be willing to add fresh positions?
Well, I think, as you rightly say, there has been a secular, positive move on the entire realty pack. Now what's happening is counter-specific moves are being seen based on either performance or the news flow. We have seen excitement around Godrej Properties. We have been talking about Godrej Properties for quite some time, and it definitely did look good at that point of time. Even now it does look good, but the specific movement is on the back of their large Calcutta project, a premium project which they have announced, and the land acquisition has happened, we understand. And that's the reason probably why there's an excitement. There is fundamentally nothing wrong with DLF or some of the other realty stocks as well. We believe that the positive momentum in the real estate stocks is there to stay. One has to be a little careful at the current levels and pick up stocks accordingly. Also, I must say that when the market is near all-time high, a bit of correction here and there, a bit of consolidation is for the course.
Your sense in on what to do with Avenue, because quite a few brokerages as well flagged off concerns on how growth may be pressured actually, and how their demat carry option is not really doing all that well. But given the dip and the underperformance in the stock, would you think around 38.50 odd levels it's a good buy?
I'm a bit cautious, Aisha, on DMart. I think it's a fantastic company. They have done a fabulous job, and the expansion has happened. And there is absolutely no problem with the fundamentals of the company. The only challenge has always been the valuation, and I'm little wary at these valuations. The margin of error is very, very limited. And I'll tell you one more thing which kind of bothers me is that the whole move towards this online business as well as the home delivery piece. And now Amazon is there, Big Basket is there, and there are other competitors there. And some of these guys have an advantage as far as at least perceived advantage as far as this online and home delivery piece is concerned. DMart also has moved in that direction. DMart Direct is there, and they're trying to fight these players as well on that space. But I think what's happening is the space which DMart was occupying for the value conscious consumers, that's now getting encroached by others, at least definitely through this online delivery piece, and that is being advertised widely as well. So one has to wait and watch how DMart performs in this particular space and how they fight competition. The same store sales growth also needs to be significantly higher to justify the valuation or an up move from these levels. So I will wait and watch and not jump into DMart.
Okay, so that's about Avenue Supermarts, 6% higher. Capri Global is the other one that we've been flagging out. HEG, 14% higher. Polymed having a great day. Sirma SGS2 is up around 6%. And apart from HEG, there's having a rub-off impact on Graphite India as well. That too is high by around 6%. Suddenly, I think Paytm is also spiking, so there's a good momentum there as well. Sudip, what's your take on Paytm as well as Zomato? Do you think 75 is sort of a fair value zone for Zomato and it will consolidate before it heads higher? And for Paytm, from this 900 level, what's the next level to watch out for?
Well, I think both these stocks I'm a little skeptical. They have, of course, realized that profitability is the only thing which the listed space values, and they are moving towards that, and they are definitely attempting to reach profitability levels. But the path to profitability is probably still not clear, at least very clearly visible for Paytm and Zomato. So I will wait and watch. The business model has still to fall in place well. I mean, they are talking about business model being in place, but I'm not sure. And I'll wait and watch. If I have to take a pick amongst the, this newly listed platform companies, I will rather, look at Nykaa as well as Delivery. I think these two are solid businesses with a clear path to profitability. They are under pressure, but if I'm a long-term investor, I'll probably buy a Nykaa and a Delivery and wait. And as far as Paytm and Zomato are concerned, I'll keep watching the space and only start biting into these when the path to profitability becomes clear.
Okay, let's understand whether or not, you're buying anything afresh in the market and any resounding conviction ideas that you may have.
Well, I think, one stock I'm bullish and I've been, talking to investors to buy, that's Reliance. I think we all know the rationale for buying Reliance. The multiple segments are doing well. There is a positive momentum in the retail space, and Reliance Retail is the biggest. We talked about DMart, but obviously Reliance Retail is a significantly higher scale they're operating in. We know about Geo and the way Geo expansion is happening. The green energy piece is also falling in place, and of course the traditional business has been doing well. But I think the biggest, the point where the investors will gain is value unlocking. When that will happen, when the listings will happen, when the green energy will start having its own set of investors, is difficult to predict. But at current valuation, I think Reliance does look very, very interesting for somebody who is willing to invest for 1 year.
Sudip, on this entire electricals, manufacturing themes, any ideas there?
No, I think, the overall this space looks very good for the long term. You talked about Dixon. I think the scope for these companies are significant, and I think if somebody is taking a slightly longer term view, these are definitely good bets. On the overall, this China plus one or the PLI scheme related benefits or manufacturing made in India, whatever scheme, whatever structure or whatever opportunity you look at, I think we have seen this getting played out in specialty chemicals and chemicals. We have seen it getting played out in electronics. I think the time is now right for the textile and textile exporters. So a well-spun, or in Arvind or Gokuldas Export. These are the companies I'm looking at. They have also moved up, but I think there is significant opportunity from current levels for these companies. Also, India is talking about signing free trade agreement with some of the European countries and UK. This also will give them a significant boost in exports. So these are the stocks to look at, is what I believe at current levels.
Okay, so